There's a guy who calls himself the financial prophet. He says he has much higher than average industry returns and that Tesla's stock is set to hit $2,500 US. Is he right or is he wrong? Hello, my friends, and welcome to the Electric Viking. My name is Sam Evans. I'm coming to you from Melbourne, Australia. Welcome to all your new subscribers. Welcome back to everyone else. It's going to be an amazing year this year. Tesla stock. Well, could it hit $2,500 US? If the question is this year, then no. That's my answer. Just no. I don't think so. No. If the question is, could it hit $2,500 by 2025? Absolutely. Why? How? Here's how. Here's why. The financial prophet, Viktor Durganov, says that Tesla recently announced blockbuster production and deliveries for the fourth quarter of 2021. True. The company smashed consensus analysts' expectations by 16%, expanded delivery numbers by a whopping 72% over last year. Tesla's earnings numbers should come out later this month, but most analyst figures seem very low. Now, the financial prophet says that he expects Tesla to surpass consensus figures by a notable margin, and the company's stock price should get a considerable boost as a result. My rebuttal to that would be, often when we get these amazing numbers, the stock price goes down. Who the hell knows what happens there? Anyway, that's what happens sometimes. I'm not sure that's going to affect the stock. But he also says, I expect Tesla to continue beating consensus expectations in future quarters, and its stock price should continue trending higher in the coming years. Now, I have to agree. That's why I own a lot of Tesla stock. Well, not a lot compared to solving the money problem. I'm not quite on his level, but a fair bit of my portfolio is Tesla stock. Now, the idea was discussed in more depth with members of his private investing community, and I'll put a link in the description below to his community. Okay. Early this month, Tesla announced excellent vehicle production. Well, I wouldn't call myself a financial prophet by any means, but I did predict almost correctly the number of Tesla sales for 2021, which I said would be around about 900,000. They hit 930,000, so it's pretty close. Now, the company's share price hasn't done much since those figures were released, of their production numbers in Q4 being really, really good. And this was due to a broad market sell-off. Tesla will report fourth quarter revenues and EPS in a couple of weeks. While many analysts have raised their forecasts, the financial prophet believes that the company can still beat these consensus figures. Moreover, the company should continue to guide higher and report better than anticipated numbers as we advance into 2022 and beyond. Of course, it's going to happen. Why? Well, a few reasons. In fact, there's three. I'll get to them in a second. Now, here are Tesla's blockbuster numbers. They delivered 308,600 total vehicles in the fourth quarter of last year. That's an increase of 72% over the previous year. That massively topped consensus figures of around about 267,000. And Tesla's stellar results indicate that demand for its cars remains incredibly robust. In fact, robust is a massive understatement. Look at the demand right now they're receiving in China. They have months of waiting lists in China and the US and in many places all around the world. In fact, for many of the models, you've got to wait up to 2 years. Now, I made a video talking about the myth of Tesla not having enough demand in China. A lot of people have been claiming this online. It was a very, very common myth, and I pretty much debunked that ridiculous idea. I'll put a link in the description below to that video. Now, as the company's production capacities continue to expand with its massive expansion of Shanghai, its opening of Gigafactory Berlin and Gigafactory Austin, Texas, and I believe probably an announcement next year that they'll be building another factory somewhere in China, Tesla's revenues will grow substantially in future years as a result. Now, Tesla's full year numbers of 936,000 vehicles show you how close the company came to selling 1 million EVs last year. Now, in total, the company's 2021 deliveries surpassed the previous year's results by a really staggering 87%. That's in spite of Tesla selling very few Model S and Model X, because basically production was halted for most of the year as they started to put in the new changes into these cars. So they sold very few. They only sold 11,750 Model S and X vehicles, and now they have enormous backlogs for those cars, even though they are extremely expensive. Now here's what to expect from Q4 earnings according to the financial profit. Last quarter, his EPS estimate was off by only 1%. Pretty good track record. So he says he's going to hit the bullseye this time, right? Now the company delivered 11,750 Model S and X. 17% were subject to lease accounting. Therefore, Tesla sold around 9,753 cars in the S and X segment last quarter. Tesla's Model S and X segment average selling price has increased recently. So thus we will apply an ASP, average selling price, of $115,000 for the Model S and X segment. Using this ASP provides us with an approximate $1.12 billion in revenue for Tesla's luxury upscale segment. In the Model 3 Y segment, leasing accounted for 5% of deliveries. Therefore, last quarter, Tesla sold roughly 282,000 vehicles in its Model 3 and Y unit. Implementing an ASP of $50,000 per car implies that Tesla derived approximately $14 billion in revenue from the 3 and the Y segment last quarter. Once we approximate Tesla's revenues, gross margin, and expenses in other businesses, we can estimate that the company should deliver in revenue and EPS for the fourth quarter $15.3 billion alone for Model S, 3, X, and Y, or the sexy lineup. Now, once we add in $450 million in leasing and $400 million in regulatory credit revenues, we come up with $16.15 billion in total automotive sales revenues. After we computed energy generation and storage plus Tesla services and other segments, we arrived at an $18 billion revenue figure for Q4, $18 billion in revenue. Now that figure is quite a lot higher than the consensus of $16.3 billion, nearly $2 billion higher in fact. But it's actually lower than some higher end calls that exceed $18.3 billion. If Tesla meets consensus figures, it will be a 52% year-on-year rise in revenue. And if the company meets his projections, there will be a 68% year-on-year surge in sales. Now, many analysts, right, expect pretty impressive double-digit revenue growth to continue in future quarters and years. But many of these figures are relatively low to what the company will likely achieve over the next couple of years. Now, there is historical precedence for this. We continuously see upward revisions in Tesla's revenue and EPS estimates, and this trend will likely continue as the company progresses. In other words, the naysayers and the critics do tend to change the bar, tend to change the goalposts over time to try to fit their narrative somewhat. Now, Victor says that in previous articles, he's mentioned that analysts have often been asleep at the wheel on Tesla. Although EPS estimates have increased notably in recent years, there should be plenty of room for upward revisions in the future. Now, the financial profit predicts there will be an EPS estimate of $2.66 per share, which is about 17% above consensus figures, representing a 233% year-on-year EPS increase. Here's the bottom line. Tesla has shown a tenacity for surpassing analyst estimates in recent quarters. This trend will probably continue. The company has exceeded consensus expectations by an average of 14% in its last 4 quarters, 14% in every single quarter. And this trend of outperformance will likely continue. Moreover, Tesla delivered a much better than anticipated production and deliveries report for the fourth quarter. The results suggest that Tesla should provide more substantial Q4 revenues than many analysts predict. The revenue increase should translate to a better than anticipated EPS result, reflecting positively on Tesla's stock price. Now, the financial profit says that his EPS and share price appreciation estimates are more aggressive than his prior analysis. However, we see Tesla performing and delivering better than expected, he says. Furthermore, I was overly conservative in my EPS projections in previous articles. Tesla could provide close to $30 in EPS in 2025. And even if we lower the company's forward PE multiple substantially, it will still arrive at a notably higher stock price than we see now. If Tesla continues delivering and surpassing analyst expectations, I expect the company's stock price to be around $2,500 US in 2025. That's only 3 years away. So that would be a doubling, well, more than a doubling of Tesla's stock price within the next 3 years. Pretty good return on your money if you're willing to risk that bet. Now, what are the risks to Tesla for this not happening potentially, right? Risks exist. There are a few of them. While the company can earn close to $30 per share in 2025, the company is very far from such figures today. Therefore, there's the risk that Tesla will not illustrate the kind of earnings growth that the profit expects. A slowdown in demand, increased competition, supply issues, decreased growth, and other variables are all risks we should consider before betting on Tesla to grow EPS several fold through 2025. Serious concerns could cause Tesla's valuation to lose altitude, and the company's share price could even head in reverse if any serious issues arise. Therefore, one should consider the risk carefully before committing any capital to a Tesla investment. Now, one point I want to make that people seem to be overlooking here is there's like hundreds of YouTube channels just talking about Tesla. As you know, we do talk about Tesla on this channel, but I mean, 70% of what we talk about has nothing to do with Tesla. It's, other car companies, battery companies, etc. But you have to consider the fact that all the talk does contribute to the share price. It's sort of marketing for Tesla's share price. There is no other car company in the world that has anywhere near the power of the free marketing Tesla gets from YouTube, from forums, from websites, from the general news media. Even though the news media can be very negative and cynical at times, it still does give Tesla free marketing as a brand. And I believe that is one of the strong points that many analysts are missing. And you know what? If we consider all of this together, we put it all together, and then we put one additional thing on top of this. Elon Musk. Jim Farley, Elon Musk, Herbert Diess, more so Musk and Herbert Diess, but all three of them are excellent CEOs in different ways. Sure, Elon's quirky, but he's also a genius, a very driven genius. And I believe Tesla will continue to hit its goals. They actually have followed through their master plan in a way that no one would have envisioned that they would have. This will continue for the next decade. I don't agree with some of these ridiculous YouTube videos, clickbait nonsense where people are saying Tesla's stock price is going to hit 25,000. This is the kind of thing where if you see this, it's time to unsubscribe because you're being brainwashed. But doubling of the stock price, or a little bit more than a doubling by 2025, that is definitely within the ballpark of reality. Thanks for watching the channel, and I'll see you again on the next one. Bye-bye.